The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And it is an interesting day. And what can we say about it?
This is Houston. Say again, please.
Houston, we have a problem.
Not only did Houston have a problem, if you didn't hear about it, the space station pilots had to be moved over into the Russian sector because of a problem. But boy, did we have a little problem out here with some bad news, bad economic news. We're off 28 points on the S&P cash, 2.56 billion shares on the New York Consolidated Tape, which is pretty good coming into this time, but not as big. I hate that it's happening today because, of course, it is options expiration. I'm seeing some option expiration games out here. I don't think it's going to change the long-term view of it. I thought that they would probably try to hold these stocks out sideways until probably Monday or Tuesday next week, but it didn't look like that was in the plans. Very big surprise number. I think that number surprised everybody on Wall Street. Normally, the Wall Street cats have their own people out there looking at the wheat and their own cats milling around the government boards, and they get the heads up way before. But it certainly looked to me from both what the options look like, the reaction, and let's start sandbagging early in the morning and trying to put up some barriers around some of these stocks and ETFs early in the morning that are now starting to erode a little bit. Could be problematic. I thought that we were probably going to close, and we may still, at about 2025 on Friday. That wouldn't be a big deal if we had a 25-point bounce. But I remained short, thinking that surprises will happen to the downside, and we're going to talk about why that is. But I've said it before. We're going to try to say it yet another way and give an example of how to see it today. And what else do we want to look at out here? I think that's, you're basically off, 300 points on the Dow. You're off 53 points on the NASDAQ. You got 1.1 billion shares there, almost 1.2 billion shares now. So it is a day with some action, and I just thought that we're probably going to have lower volatility in this pullback. Seeing these bigger moves out here, I find very interesting. Maybe the market was even a little weaker than I thought, but certainly looks like we're setting up for a test of the 1822 low that we had. And like I said, I would just wish this wasn't during options expiration week. I would feel a lot more confident this isn't some kind of bear trap. I am short, but the longer we hang out here, probably the better it is. Also, if it was an options expiration stunt, almost always about 2 o'clock on Wednesday, you see that they start reversing that stunt, and that we're still within earshot of the lows out here, which was what, 1990? Let me update this real quick just so I can see my low. 1988 was the low. So we're 6 points above it on the S&P cash. The question is, do they really get any kind, or are they able to mount any kind of row? And some of the stocks that they were pushing this morning, will they be able to continue to hold them up into the close? I was watching them push Google early this morning, and it certainly looked like option market makers wanted Google to expire at about 520. I didn't think that would be a big problem. There's enough short interest in Google that they could probably push that up, but it didn't look like it was going to, or at least doesn't look like it was willing to hold. Let's get a current quote on Google. To real quick. Not bad. Still up $4. $499.96 on Google. So they're probably going to try to keep this thing up at around $500, although they'd like it to be $520 to kill off as many options as possible. If you've not listened to my show during options expiration, I'm something of a options expiration week expert for putting on trades. We've had 3 or 4 good cycles over the last year, probably now 4. And we're looking at it. And my thought was, you get 4 in a year, you're probably going to get 3 the next year, and the other 9 of them are going to be flat. We've certainly got action during this expiration week, but I see, like Google, a lot of effort out here. It got to 503, but we'll look at charts and stuff like that later and see what else do we have going on. Got to get to our history. And, of course, it's always history repeating.
That it's all just a little bit of history. That it's all just a little bit of history repeating.
And it is history. I don't have anything specific on this date other than something that happened to me last night. I saw a bumper sticker on a car and thought, well, that's kind of interesting. And I looked a little closer and I recognized it. It is the Marine Raiders World War II patch. And I thought, well, that's kind of interesting. I wonder why that's on that car. And another little bumper sticker down there about being a corpsman, or if you are the president, you call him a corpse man. I don't know where he got that, but well, anyway. So I go inside, and kind of interesting to see all the people around there. There's nobody that was over 60 that I saw instantly, and then I looked up in one booth. There's only one guy, and he looked to be about 90. I figured that had to be him. The Raiders only existed for a few short years. They were Marines that were trained as the first, I'll say the first kind of special forces that we had, and some of them ended up climbing up that mountain and Point du Hoc, why Germans were throwing hand grenades over the edge at them and shooting at them and doing other things. They decided to go up and over anyway. I can only imagine being a corpsman, which is basically a field. I wouldn't call them a field surgeon because they really don't. But they were there, of course, to do first aid. But you have to say that I wanted to go up and say something to him. I knew it had to be him because there's nobody else that was a Marine Raider, because you have to be 85 or 90 now. Not many of these guys left. And I talked to my waitress. I said, well, do you know that guy? And she says, yeah, he comes in here every Tuesday. I said, oh, that's nice. Comes in with his wife. You could tell that they'd been married for 70 years or 60 years. Very quiet dinner. Not a lot of arguments left after all that time. And a guy behind me heard our conversation and started talking to me for a minute. I wanted to go over and say thank you for your service, but the waitress was standing there, and I said, well, this isn't just one of your average kind of Joes that was back in the back with all the gear. This was a guy that probably saw some incredible service during his lifetime, and you would think that I was talking about nuclear physics or something, because it's like, well, I could care less. But meanwhile, I was talking to him. He adiosed out the corner, so I didn't get to say anything to him. But I know where he goes, and I know that he shows up there on Tuesday nights. So next time I'll say something to him. But on yesterday, not this day, I guess we could say I was in the same room with a hero. And hopefully next Tuesday I'll talk to him and give you a fuller report. But I can just imagine what that man has seen and done. Now, we talked about the last couple of days about how markets fall apart. And on Friday in my daily newsletter, I pushed one of the symbols or showed one of the major tools that you should learn out here. And one of the problems is you can't use it all the time. In fact, it's rarely available. And it's not one of these kind of ones that kind of sort of works. It works extremely well, probably 80% of the time. And I think you should get used to taking a look at it. You all know how big a fan I am about the summation index. The McClellan oscillator is pretty nice, and Sherman, who was the father, basically invented it in the late 60s or early 70s. I can't remember exactly. I actually, when I was starting to learn to trade, bought his videotapes, went through them a lot. And basically, there's a lot of stuff that they push that probably, at least from my back testing and looking, didn't seem to hold a lot of water. The summation index itself radically changed my trading, and learning to trade with that and anticipating the major changes in the advanced decline line make it fairly easy to take a look at. But there's one pattern of any pattern out there other than just going up and down that is extremely useful, and that is a fish hook pattern. If you're watching on Tiger TV or the Den, hopefully you can see this very well. But basically, you come down, you come back up, and you make something that looks just like a fish hook. And most of the time, I've got it highlighted in the upper right corner there. It is a nice thing that looks like you drew a hook without a round bottom out there. I mean, it goes down, it pulls right back up, and that's in the oscillator itself. You also get some kind of that also in the summation index itself. But normally it is the most vivid in the oscillator. And if you get a turn down, the oscillator is the original, and then the summation index is a smooth version of the oscillator, the summation index. So anyway, you can check that out. But the rules that they give on his website should be in here, right here. And I'll just quote this off of the McClellan's website. The fish hook depicts the failure of that effort, basically a half-hearted attempt to reverse course and get prices moving higher again. The fish hook depicts the failure of that effort. Inverted fish hooks also appear in the historical record and have a bullish implication. But I would say that bearish fish hooks on the way down are much more powerful, and they're much more worrisome. So I would keep an eye on that. If you've not seen fish hooks, they've got, what did I have it? Right there. There's the link to it, but you can find it on the McClellan oscillator site, and there's the link. If you need me, I can email you a link for that. But that's what I saw. That's why I pulled the trigger when we started going through 2050 last week, and it's got about an 80% success rate. You probably want to keep that in your quiver. It's not out there all the time, so know that. But when you get it, you need to jump on it. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, interestingly enough, during the car show in Detroit yesterday, Elon Musk had a few choice words to say, and that drove, down $20 on Tesla pretty much overnight. I think 185 was the low out here this morning, and it was up about 190 for most of the morning off the lows. But it pretty much happened because he said that sales in China were disappointing in the fourth quarter. There's two themes that seem to be wishful thinking on Wall Street. One is that China's going to save everybody's bacon and they're going to do a lot of business there. Never seems to really come out that way. There's always a problem. But what can you say? It is tough. Of course, it got hammered. It's a $40 stock. And, of course, what you do know is some of the other things he said mean that they will not be profitable until 2020 at the earliest. They're also going to be late with their latest car. Plus, they've got Toyota coming out with huge competition along with Audi. And just about everything that could go wrong has gone wrong for the Tesla. It doesn't matter how great a car you have if it's, let's say, at a 40% premium to a gasoline car. Now, of course, with under $2 a gasoline, $2 a gallon gasoline, the Tesla is probably in the neighborhood of a 45% premium to the same quality of car. It may even be the best car in the world, but is it worth paying 45% more to go the same distance and I have to pay 20, 25 grand for the next battery pack and all the other hassles that go along with that? If you're lucky, you get your battery dies before the warranty period and you get a new battery. But that's a consumer side of the equation. Let's say that they get 1,000 cars back that need batteries. I mean, that's going to be a huge amount for a small battery, a small company like Tesla. And I can't see where this thing has ever been worth more than about $40. Almost every company I know of in alternative energy has one major problem, and that is instead of coming out with a technology that is fiscally competitive, they can continue to say, if we just keep building and building and building, the economies of scale will make this correct. And that's almost a 95% on average loser plan for coming out. Now, kudos to him for building a car, and maybe even one of the best cars made anywhere, gas or electric. But it does not matter if it is not fiscally competitive. Eventually, the conspicuous consumption people will have left, and you will be left with the customers that are not willing to pay 45% more to say that they are green and recycle their trash and all the other stuff. They're going to say, hey, that money could easily go to my college fund for my kid or something else. And that's it. You need a car that's probably the Tesla, $78,000, probably needs to sell for about $45,000 with a battery that lasts 20 years. If it did that, let's say the battery lasted 15 years. I think you would be fine. But it's only about 40 grand too much. And that is problematic for Tesla in the long term and all these alternative energy companies got here. I warned on most of the alternative energy companies 9 months ago, and almost all of them have the same problem, and that is that they keep on thinking if they just keep building more of them, the economies of scale will catch up. And the answer in things like electronics and or battery storage is history says that is a fallacy. You're going to need some kind of order of magnitude jump in something, whether it's any of the other technologies like what should that be? Supercapacitors or fuel cell technology or a battery that wouldn't die in 5 to 6 years or have 50% of its capacity in 5 years, or all the associated problems with electric cars aren't the problem. It's putting electricity in that car, whether it's fuel cells or anything else, and it's always going to be an issue. But if you look at any of these companies that are in this alternative energy, their patterns in their charts all have a rather huge pattern. Ascent Solar Technology was $8.30 on March 11th, 70 cents today. CSIQ, $41.12 on September 8th. That's in the $22 range today. We'll be back, cover a few more of these to get on to some of the other movers in the market shortly.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We were talking about some of these solar energy companies, and the reason why is I said 6 or 9 months ago that you needed to watch out for any of these solar companies. One, because they weren't truly profitable. They only existed on subsidies by governments. And two, none of them could exist trying to sell into the free market without those subsidies. It didn't like corn or wheat, where if the subsidies went away, they'd plant less wheat or corn, and the prices would rise, and the farmers eventually would work out the correct price in the market. But in this, where there's no way to even build solar for anywhere close to, it costs about 4 times more to produce electricity through solar cells than it does through even natural gas, and even less than that for coal. Wanted to show the 1-year chart here of CSUN, China Sun Energy. This thing was $6.72 on March 9th. That's bound to $1.10 just a few days ago. DQ, new energy company. These things down on fairly light volume. They may be actually getting ready for a bounce, which is one of the reasons I'm talking about these things. I wanted to short them, but boy, you couldn't find shares to short any of these companies. Everybody knew these things were going to blow up, and options were horribly expensive. I wanted to go out and short solar, a few of these like SCTY, which we'll get to in a minute. But now they're getting down to the bottom. They're probably going to have fairly high short interest on them. And you might want to watch these for a very short-term bounce out here in the market. We did get that bounce. We're now just off 16 points on the S&P cash, off almost 19 points off the lows right now. And that goes back, if you started listening to the first couple of minutes of the show, where we were talking about almost always at 2 o'clock on Wednesdays, you see the low or high of the week for options expiration. If it is an option expiration stunt, I don't know if that comes because there is so much news at 2 o'clock on Wednesdays, but certainly looks like maybe that is it. I think maybe we could drift up just a little higher and see the real damage, the real devastation start next week. But again, we'll take a look at that a little bit more in the reminder of the show. First Solar saying was $73.78 on September 12th. Got down to $39.88. So a lot of these, almost 50% of their previous lows. And don't look for at least the U.S. government to come in and bail these out. We've talked about the reasons for that. JA Solar, one of the ones that hadn't come out here and gone to its lows just yet. Jinko Solar certainly has. This thing's going back to a gap that's been around for a while. That gap, this thing gapped up and left a gap, trading gap from September 20th of 2013. And I don't know, 7 million shares there, not that much. But you got into it 2.3. That's why I'm saying some of these may look like they're setting up for a bounce. I think some people may inadvertently buy these things thinking that crude oil is going higher. So just keep an eye on that. That if it is, crude bounces a little bit, it may be more just a short-term bounce than anything else. SCTY, this thing's been kind of going sideways out here. You have to wait for this thing to test the 45 area where it's had two previous lows. That's why I think maybe you get a little bounce out of these things. On Solar City, my suspicion is that this stock is building up a huge amount of energy to blow through that $45 level, and you want to watch it. And it may take another 3 months to do that, but it looks to me like it's going to have a lot of problems. Renee Solar, SOL, was October 8th high in 2013 at $6. Of course, was down to $1.21 on December 17th, going to go test out those lows again. SPWR, which is Sun Power, another one up at $42.07 on June 27th, got to almost half on December 15th at $22.75, 1.7 million shares. A little bounce out of here, little volume yesterday. My guess is you may want to look for these things to come back out here and base out. If crude really started running again, maybe you could see some stuff in this, but problematic. One of the things that looks fairly ugly out here, and again makes me think that maybe these things could just blow up and go out of business, or some of them go out of business, is the Global Solar Index ETF, the TAN. And this one has a nice little gap that's acted as support a few times out here at about $32. It's been bouncing off that for a while, and actually not making a bad pattern out here. You just can't stand any more energy back down at $32.23. My guess is it's probably going to come back out there and base a while with crude. YNG, which is Weiling Green Energy, from China, another one of these solar cell companies. This thing may be basing out also, but you may want to be watching these if energy does do anything like getting a jiggy with it. Right now, it doesn't look like anything more than a pop and a downtrend for crude. December 17th, low of $1.87. And of course, that was $8.77 on October 8th in 2013. And even into March 7th of 2014 was $7.15. So what is that? Fourth of itself? Third? Whatever. So we've got lots of companies out there. I just wanted to go back through those solars today, especially with the possible bounce in those things, and just with the admonishment to be incredibly careful. These things could really get you. Now, one of the other things that going on out here, so where is, there we go, was JP Morgan, had some dismal earnings announcements, and couldn't really believe my ears when he actually used a foul word during his earnings call. And the CEO, Jerry, can't even say it, CEO Jamie Dimon said that the bank would try to avoid stepping in dog, and I'll let you finish that. But that probably tells you everything you need to know about JP Morgan. Of other things of interest out here, the price of Bitcoin is continuing to crash. I also warned about this being somewhat problematic over a year ago. It dropped to 173 this morning. It was down from 244 just a day before and dropped nearly 35% here in one day. We're seeing a great deal more of these have the same kind of issues. So just keep an eye on it. Of course, a copper inventory continues to make new lows. We may have had a little bounce out of here. There's a nice chart on Business Insider. It was very interesting, but shows the production against demand, and it is awful. And I don't see any chance that, to me, it looked like probably a 95% chance that copper sees that $2.20 level and retests its low. So we've got all that stuff going on in here. And of course, there was a company in England that was a copper company and a gold company, and it had problems today. I forget the name of it. It's got a tradable vehicle here in the United States, but it was down 10 or 15% on some bad earnings. Copper and gold company. I'm trying to think the name of it. But that kind of put the focus back on some of the weaker gold companies here in the United States. ABX was down fairly strongly and with a volume the last 2 days. But you wanted to get this thing and you wanted to see lower volume. And it's kind of interesting, this November 5th low at $10.90, 26 million shares, and you had the huge volume day that didn't do much. I was looking for it to break that 1090 with a lot of volume. Basically, you got back into it the next couple of days with 18 million shares. Yesterday, you had 27 million shares, which broke that volume, that level with a volume. And of course, you got that $10.04 low from December 24th. But you got some decent volume here before the end of the day. Still could be very problematic on a few of these gold companies. Arch Coal, some people have been talking about buying coal. Well, you finally have your first sign to buy it. And that is this thing breaking below its previous October 13th low that had 20 million shares with 4.7 million shares. So I don't know if I'd want to own it at this point. We talked about it several months ago. The government is pushing to run all these coal companies out of business. But, at least the chart says maybe there may be something there. It may go sideways for a while, but if you were thinking about coal, take a look at it. We're going to Bill from Littleton, Colorado. How you doing today, Bill?
I'm doing pretty good, David. How about you?
Fantastic, I think.
Well, that's good. I've got some questions on Dish Network. I don't know if you know or not, but they have a lot of that spectrum, and their spectrum auction is currently going on with the government. Mm-hmm. And I didn't know if you had an opinion of how that's going to play out with Dish and what they've got in the works now.
The biggest problem with Dish, of course, is they use geosynchronous satellites. That means the satellite's 25,000 miles up in space, right?
Right.
So
that's correct.
if you're using their internet, that means that it has to go from your house up to the satellite, back down, so that's 50,000 miles. It has to do that and then go to the regular internet and then all over the place. Now, if you're just watching regular television, that's kind of interesting and an alternative to cable systems out there. But as more and more people go to cable for their internet, not for their viewing, the proposition on this somewhat becomes problematic. This thing ran up, of course, on the idea that they were going to get acquired, which I think is pretty much fizzled out by now. But that's the problem. They own two technologies, basically direct broadcast TV and a less well-known internet system that can only handle a handful of people. Now, the alternate side of that is there's several people talking about putting a constellation of 240 low Earth satellites around. I think we've heard it from Facebook and Google and a bunch of other folks. So there would be literally nowhere on the globe that you couldn't get internet access. And since it's only 250 miles up, would be much quicker. And maybe even usable for a lot of people that don't have fiber to their house for cable. But it's hard for me to say, other than the people that are in areas that don't have internet right now and or have a cable provider anywhere close to them, what's the long-term proposition on Dish? I mean, do you have an opinion?
Well, I don't, I understand what you've said there so far. But from what I understand, they're trying to do, or may try to do, would be to partner with another company like T-Mobile, Sprint, one of those companies, or maybe some other company.
Yeah.
And
Go ahead.
Go ahead.
No, finish up.
Okay. And a partnership with that because they own so much spectrum. And there's a number of ways they could do that, either buy a company or lease out their spectrum to other companies. And how much value can we get in that with the current technology and the way it's going?
I don't think a whole lot.
You don't think there's a lot of value there?
No. I think I think that they ginned up this whole buyout thing to get the stock price up and distribute as much as they could at the highs. I think that's pretty much it. Now, it was interesting because it was a real competitor to Comcast and Time Warner and those guys. But the way I see it right now, it certainly looks like Google wants to get into this, into the internet market. And if they do, I think they're going to clean the clock of people that are severely hated like Comcast and Time Warner and some of the other ones, to a lesser extent Verizon. But basically those companies are going to be delivering all your video across fiber optic cable, and the bandwidth is going to be huge. So for the people that really can't get anywhere close, some of these new constellations of very low power, low weight satellites that are traveling at about whatever they are, 250, 280 miles over the Earth, make a lot more sense because you're going to be able to get fairly rapid signals, and because of the amount of satellites that are going to put up, pretty good amount of capability. When I had mine and I lived up north in the middle of nowhere where there wasn't decent internet, that was the problem. I mean, they were always trying to restrict what you could upload and download. They would slow you down to the speed of a telephone line because they only had one satellite up there. And I don't see that changing. I haven't heard them say that they're going to put a constellation of 240 satellites, low Earth satellites up. So there are one closer, and two, there's always one coming, coming your way.
Thank you for your patience. Appreciate it.
You bet.
Bye.
So Dish, okay. Long-term prospects, not so much. We'll be back in a minute with Mac from Houston.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As Seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to go right to Mac in Houston. How you doing today, Mac?
I'm doing just fine, David. I had a quick question for you.
Okay.
I work for this company. It's oil and gas services, Cameron. Mm-hmm. And I think, looking at the chart, I think the stock is going substantially lower.
Well, at least $38.38.
Yeah, that's what I was thinking. I was thinking it's 37.5 or so. Now,
yeah, you got the June 25th low of 2012 at 5.6. Yeah, at June 25th of 2012, 38.38. What are you looking even farther back than that? Yeah, you got several lows back here in that $38 level. That looks like the first level of support. And then you got a gap, not a big one, but a gap that goes out that way. So what's your question on this? What do you think?
Well, I mean, that's what I was just trying to, confirm that I think it's going lower. But then when I look at there's a couple of gaps on the way down. Mm-hmm. Is there a hard and fast rule about those gaps filling back up within a certain period of time?
No. Are you talking about those 3 gaps that you think are down here lower?
No. I'm talking about in the last 3 months or so. There's a couple of gaps, like around 55.
You're talking as a possible 3-gap play?
Yeah, that's what I was,
You've got 2 gaps, right?
Yeah.
But I don't think that they're big enough to follow my rules. If you want my rules, if you just search 3-gap play on Google, you can find all my rules. I've written up a white paper on it.
Okay.
But I don't think this qualifies, but I'd have to look at it harder. But if you can't find it, you can always email me at path@tfnn.com and I'll send you the link. But there's some rules on it. Now, it's got that huge day down, which was on the 28th of November with 4.6 million shares. And that would qualify. The next one really didn't. And you should have had one more. If you get one more huge gap down to like $38, you could see a bottom out it here. But even if you go back further, if $38 fails, you've got $31.42 as your next level of support.
Yeah. It seems to me it's just going to trade with oil anyway, even though we still have a 3-year backlog.
Yeah.
Which is I'm really surprised.
How many of those orders going to get canceled though?
I don't know, because they're usually long term. And see, this is the thing. Anything we work on average, is 3 to 5 years, ahead.
It's already been budgeted. The money's already been written off and everything else. Okay. So
now, future sales may be affected, but like the stuff on the books, I don't think so.
So I kind of try to explain this on Boeing, where everybody says, "Oh, the end of the world." Well, they still have planes to build for 4 years, whether they had another order and half of them were canceled. They still have 4 years of planes to build, right? Yeah. So the same kind of thing, but the market doesn't seem to care about that much, does it?
Yeah, no, not at this time. Yeah.
Mr. Market doesn't care a tad whether you have a job. They're looking at forward earnings and thinking that the next contract you take is going to be for lower margin, and that's what the market forecasts rather brilliantly. Anyway, okay. Anything else other than that?
No. Generally, you're looking at the market to go lower. I think I'm just thinking that where a lot of people think that it's going to crash, I have a feeling this is going to be long and drawn out. So that's probably the only difference I have in what most people are looking at now. Yeah. But you're looking at perhaps 6 months drawn out?
12, maybe 18 months until we find a big long-term bottom.
Okay.
Just a thought.
Well, thank you
anyway,
very much.
We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. And hang on for Tom O'Brien.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.